Slowdown in factory activity growth in key economies provoked a decline in oil prices. Investors are concerned about the global economic prospects after the release of the final PMI readings for the European Union member states, the United Kingdom and the United States. Fears that a downturn in the global economic growth will dampen energy demand have swept commodity markets in the past 2 months. That's why oil prices have lost over 20% compared to the June high. As for oil production, market participants are awaiting the outcome of Wednesday's meeting of OPEC and its producer allies. The oil cartel will likely stick to existing policies of a moderate output increases while keeping global supply low. Meanwhile, a Fox Business News reporter said on Monday that Saudi Arabia would push OPEC Plus to boost oil production at an upcoming meeting on Wednesday. Saudi King Salman bin Abdulaziz assured US President Joe Biden on the production increase when they met on July 16, the reporter noted in a tweet. Notably, Biden has repeatedly held the Crown Prince responsible for the murder of Washington Post journalist Jamal Khashoggi. Moreover, he even voted to make Saudi Arabia a pariah state. Furthermore, the recent telephone conversation between Russian President Vladimir Putin and Saudi Arabia's Crown Prince should be taken into account. Indeed, pricing policy in the oil market now depends on geopolitics and 2 key players, Saudi Arabia and Russia. In general, it's rather difficult to anticipate the outcome of tomorrow's meeting. Now let's take a look at the trading chart. Having gained strong downside momentum, Brent crude oil futures tumbled by about 10%. Thus drifting into oversold territory in the short term. The quote ran into the psychological level of $100 per barrel, acting as support, which led to a decline in the volume of short positions. In this situation, a technical pullback may help the asset pair some losses, but the speculative frenzy will most likely persist in the market. To extend losses, the quote needs to fix below the 98 mark on the 4-hour chart. In the meantime, gold remains near the highest level in the last 4 weeks, which can be attributed to a weaker dollar and lower Treasury yields. Downbeat statistics on the US economy signal that the Fed will take a less aggressive rate rise stance. In addition, demand for the yellow metal has increased amid escalating tensions between China and the United States, ahead of a potential visit by US House of Representatives Speaker Nancy Pelosi to Taiwan. News agencies reported that 2 Chinese operational aircraft carriers have deployed to the sea and are heading for the Taiwan Strait. Local media outlets claim that Pelosi will arrive in Taiwan later Tuesday. Interestingly, a U.S. strike group headed by aircraft carrier USS Ronald Reagan is currently in the waters of Taiwan. From a technical point of view, gold futures have edged up, hitting the level of $1,780 per troy ounce, which may now act as a resistance. And in this case, there may be a gradual increase in the volume of short positions, which will slow down buyers' attacks. However, if the price consolidates above the $1,780 mark on the 4-hour chart, the uptrend will continue. And in this scenario, the metal will hit towards the level of $1,800. Traders in the Russian foreign exchange market also took advantage of the US dollar's weakness. The greenback returned to the 60 mark, losing about 4% in value. The dollar-ruble pair hit the level of 62.65, a local high of the current cycle, at which sellers managed to take the lead. In this situation, the volume of short positions will further increase if the price fixes below 58.50. Long positions will be relevant if the price consolidates above 63. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.